compliances as far as TDS is concerned. So we have to be very, very careful for that. So I will start our presentation now. And in case anybody has any query, you can put it on the chat box. We can discuss it there and then. I hope the screen is visible.
Yes.
So yes, starting with something which we all face into that. What is this life is full of care? We have no time to stand and stare. At least we all smile looking at this. Because we are so busy in our day-to-day lives, especially with the compliances that the government is expecting us to do, like TDS and GST. Now I think now is the new Caro 2020 coming in, the revised Schedule 3 coming in. There's so much of there. So we don't have any time to stand and stare. But I think at the same time, we should be also be very much realizing the fact that apart from the work, other things are also equally important. But yes, what I'm going to cover in this presentation is firstly 194Q and 2061H, specifically because this year there's going to be a lot of auditing issues, a lot of transactions in which TDS or TCS would not have been deducted or collected. So these kind of things we were discussing that. Then Finance Act 2022, 194 IA, IB, there are small changes in that, especially 194R and 194S. Now, we all know that before on 16th of June, there was a guidelines issued for 194R. 194R is something which is applicable to most of us. If you see that all of our clients, 194R would be applicable. 194S dealing with the virtual digital assets. I think, yes, again, the guidelines were issued day before yesterday. We're going to discuss that. 206 AB, 206 CCA, also we're going to discuss that. Then Finance Act 2021, again 194 P and Q we're going to discuss. 2020, in that you can see there were minor changes in 194A, 194J, N, O, and even in 197B there were some changes in that. 2019, we have considered 194 IC, which was an important change as far as the JDA is concerned, and 194 M. So these are the main changes that we have seen in the last 3-4 years, which have been, we'll be dealing with that. Recent circulars, yes, we have covered all the circulars issued till yesterday. The last circular being on 21st of June, we have covered all those circulars. So, you will be having a benefit of that. And obviously the concluding note at the end. So to all the members, I think before I start the presentation, I think it is time for some introspection. We normally say that, gone are the days when, whatever happens in accounting stays in accounting. Now, everything is so well knitted. I think you would have all seen the new 26 AS or the AIS, the Annual Information System statement. Everything is basically getting reflected there. I think going forward, maybe even your gas bills or your, one thing you online on the Amazon, everything might come there. We don't know. So now the days have gone that we can, play around with things. None of us, nor the clients, can play around with anything. This is a report. I think most of you, if you're not aware of this, this was a report which was issued by the C&AG in 2014-15, which basically what did they do is they audited all the certificates and reports that were issued by the tax auditors, and what were the concerns coming out of it. They had published a report. Now, what were the issues? You can see there that they found out that some of the important findings are that tax auditors failed to give correct information related to allowance of depreciation in 66 cases. Then in brought forward losses, there were some issues in that. Then you see personal capital expenditure were incorrectly allowed as a tax auditor, and there were various exemptions which were wrongly taken, and 74 cases where the exemptions were wrongly taken and the tax effect was 259 crores. So these are all the, I'm just giving a glimpse of what this report was about, that even in the incorrect information regarding the tax audit reports. So they have also published this report with the name of the chartered accountants. Now, why I'm saying this, because it's very important, is that what I have highlighted, I've not deliberately, I've concealed the name, the auditing firm, everything they have mentioned here. But you can see what are the common mistakes that are being done, because normally what happens, our articles or our audit staff prepare the tax audit reports. So now in this case, you can see the first illustration. It talks about that the SSC had claimed additional depreciation of 11 crores on plant and machinery based on the tax audit report, which was disallowed by the AO as the activity of construction could not be treated as manufacturing activity. Now, by mistake, what they have done is, even in the construction sector, they had taken additional depreciation. This is a very, very basic mistake which was done. Now, regarding TDS, when we go, you can see here that one of the auditors had mentioned here that since they are not able to verify the payments under TDS, they recommend an ad hoc disallowance of 5 lakhs. Now, it might sound very, very strange, but one of our fraternity members have only reported it, and this is how they are pointing out. So the point here is, I'm going to share the presentations I'll share with you. The point here is that whatever we report, even as far as TDS is concerned, or whatever we do for tax audit, everything is under scanner. Everything is getting checked. So we have to be very, very particular for that. Now, yes, there's another taxation quality review board. I think I don't know how many of you are aware of it. Like we have the peer review board, we have the quality review board, we also have the taxation audit quality review board of ICI. Now, what is their job is to pick up tax audits of, let's say, listed companies, big companies, government companies, bankers, bank branches and all, and then give it to another chartered accountant for evaluation. So this taxation quality review board is also reviewing our tax audits and what certifications we are giving under that. So we have to be again doubly sure for that. Now coming to TDS, yes, this was the latest figures that we have as far as the tax collections are concerned. Press release dated 17 December 2021. We have the following data that out of a 10.80 lakh crore of tax collection, you can see TDS constitutes of around 45 to 50% of TDS is forms of TDS. So you can see 4.93 lakh crore out of 10.80 crores, around 5% is the 50% is the, basically you can say roughly 46% is an average where TDS is concerned as far as the total tax collection is concerned. So you can see how important TDS is as a source of revenue for the central government. And this was the latest press release which came out on 17th of June, just before 6-7 days. And where they have mentioned, the important point here is that the TDS collections for the financial year 2022-23, that is for the first quarter, stand at 2.29 lakh crore against last year that was 1.56 lakh crore. So again, the TDS income has shown a 46% increase as compared to the last year the same quarter. So all this information, basically tell us about that how important TDS is for the government, and hence they are bringing in more and more sections about that. Yes, these are a few news articles which say that now they are detecting TDS defaults, and they are also punishing the company directors, imprisoning them in fact in a lot of cases. So all these things are happening there. There was a press release also for that. So we will now straight away go to the overview. I think just a minute for the overview. We all know about TDS. It's an indirect method of collecting direct taxes. I think a very simple word. It constitutes, as I said, 60% of the direct tax collections. The most important thing is a 3D concept. You deduct, you deposit, and then you declare. So when you deduct it from the deductee's amount that you pay. You deposit to the government before 7th of the next month, and you declare in the form of filing of TDS returns. So it's a 3D concept in that manner. So other than that, I think rest of is all fine. We all know about the forms and due dates. This I'm just going to skip it. I'm going to the main important points now. Yes, we all know about due dates. Right now, I think we have just filed the 31st May due date. Now 15 June was the last date for downloading TDS certificates. So after that, why file? We all know about why filing TDS returns so that the person can get the credit. Now coming to important sections, we'll just have an overview of all the sections of TDS, and then we will go to the important ones. So you can see straight away going to the important one is 192, dealing with the salary. Now, one of the important things that we have noticed here is that people forget that salary, TDS on salary is only on payment basis. There are a few, we have seen a few cases where TDS was deducted on payment of credit, whichever is earlier. So even in your books, you are not paid salary. Normally what happens, हम directors को salary देते हैं. In the month of March, it is shown as an some shows there other current liability, some show it in the part of unsecured loans. But wherever you show, even if you're not paid the salary, then TDS deduction ideally should not happen. 194 on the TDS on interest paid by banks and post office. You can see the limit is 40,000, 10% TDS, and interest paid by others, the limit is 5,000. For lotteries cost 10,000. Now coming to the important ones, payment of contractor. We see single transaction 30,000 is 2% is the rate for company, individual 1%. Here, important point is regarding the 194I, which is relevant to most of us, 2,40,000, 10% and 2%. We all know about the rates. 194IA, TDS on immovable property. There is some change in this. We will discuss that. Above 50 lakhs, 1% is the limit. 194IB, rent payable to individual, again 50,000 per month, 5% is the TDS. IC, again a very important one, TDS on joint development, which came into effect from 2017. 10% is the TDS rate. Now 194J, professional fees, we know 10%. Now for technical, now we know there are two: professional services and technical services. Technical services, the rate is 2% now. Professional, it is 10%, and for call center, it is 2%. 194N, we all know about withdrawal more than 1 crore in cash, again we will discuss the limits. Then coming to another important section, 194O, e-commerce. If the amount is more than 5 lakhs, 1% is there, we'll discuss that. 194R, perhaps the most important section now, which will be operative from 1st of July. It talks about benefits or perquisites arising out of business or profession. Now, friends, there's a circular number 12, which is, I think we will discuss the circular, which has clarified, basically is an FAQs, 10 or 12 FAQs they have given. But I think more than clarification, they have put in a lot of doubts, and we will discuss those doubts also when we go there. So that is again a very important thing that we have to take care. 194S, TDS on purchase concession on VDAs, and of course 194Q, which I think most of us are now very much aware of, is TDS on purchase of goods. So basically, if you see from 194A to 194Q, almost all the section like ABCD में खाली 7 letters ही बाकी है, बाकी everything they have covered in TDS. So you can see how much vast the TDS area is as far as the section is concerned. So yes, if I give you this note, will you accept it as a payment? If I give you this as a note, I know you will not accept it. If I give you this, then also you will not, but this you will. And why I'm saying this, because earlier those who have seen this is an old 16A form, for the TDS credit that we used to get was all manual. So people were writing anything and we are not able to get the credits. But now with the new form, I think we all know that it's all computerized. Everything is through Trace's website, and hence we are able to get the relevant credits as well. So now, yes, we all are busy in our offices. There are so many changes happening. As I said that we have no time to stand and stare. I think we'll just discuss what is happening now. Revised Schedule 3 requirements are there. We all know they have been exhaustive. Coupled with CARO 2020, there are major changes. It has led to a lot of changes in the audit procedures. I think we have a lot of times we have revisited the audit because of these disclosures. So these are the major changes. Audit report has also undergone a change. I think there are finer aspects of audit report which have undergone a change. So we have to be very careful for that. GST, I think apart from the 2B notification that for that came in January, there are every day something new or the other is coming up. E-invoicing, company law. So there's everywhere you can see there are changes going on. And in all these changes, now today we're going to discuss about something which is very relevant for all of us, and that is TDS and TCS provisions. So starting with 194Q. So what we are going to do is we are going to take each section and we are going to discuss a few case studies or maybe a few pointers for those sections. And then if you have any doubts, we can take that. Otherwise, we can move to the next section. So as we normally do, as a chartered accountant, we should be reading the sections, which is very important. So if you look at 194Q, TDS on purchase of goods, I will just read the first paragraph, which will clarify a lot of things. Any person being a buyer, so for a buyer is most important, who is responsible for paying any sum to a resident. Again, here is a resident, so non-resident is out of it. For purchase of any goods of the value or aggregate of such value exceeding 50 lakh rupees in any previous year, shall, at the time of credit of such sum or at the time of payment, whichever is earlier, deduct an amount equal to 0.1% of such sum exceeding 50 lakh rupees as income tax. So what are the important conditions here is there should be a buyer, there should be a purchase of goods, aggregating more than 50 lakh rupees. There should be a seller, and there should be a the TDS rate is 0.1%. These are the main points of it. Now, who is a buyer? In a simple language, buyer is a person whose total sale, gross receipts, or turnover from the business exceeds 10 crores during the immediately preceding financial year. So buyer is also defined. Now, who is a seller? That also has been defined. Now we will discuss that. So in this case, in just a short, it is applicable from last year, 1st July 2021. Buyer has to deduct TDS at 0.1% if the aggregate of goods exceeds 50 lakh rupees. Buyer we discussed is exceeding 10 crores. If does not provide a PAN, then TDS will be deducted at 5%. Then not 20%, 5% instead of 1.1%. And yes, there's an interplay 206C1H and 194Q. We will discuss that interplay also now. So first of the questions is, I think most of us are now aware of these questions. So I would now request you to answer in the chat box whether 194Q, whether GST will be applicable on that, we have to deduct TDS on GST portion or not. And what about purchase returns? In section 194Q, do we have to deduct TDS on the GST portion? I think you can answer in the chat box. Yes. So 194Q on the GST portion, and what about the purchase return? Because this is a very normal query that we deduct on the purchase and then there's a purchase return. So as far as the GST is concerned, department has clarified that on GST, TDS is not to be deducted. It has to be deducted only on the gross value. Unlike 206C1H, where on the total consideration, TDS, TCS has to be collected. For 194Q, no need to deduct TDS on the GST portion. For the purchase returns, they have clarified that in the later on when you get the purchase return, you can then modify or you can adjust it in the next purchase. That you can do that. Coming to the next poser, whether non-resident can be a buyer under 194Q. So they have mentioned about the seller to be a resident, but they have not mentioned that the buyer can be a non-resident or a resident. But again, they have clarified that for the to remove difficulties, 194Q shall not apply to a non-resident who is a buyer. So in short, that if you are exporting goods out of country, in that case, TDS will not apply. Now, coming to next question, exempt income. So again, they have clarified if your income is exempt, then no need to apply deduct TDS under 194Q, but it has to be exempt under section 10. On advance payment, yes, a very important question, whether tax is deducted on advance payment. Yes, even if you make a payment, so payment or credit, whichever is earlier, TDS will have to be deducted on advance payment as well. And in the year of incorporation, suppose I form a company in the year 2021 or 2022, whether TDS will be deducted under 194Q, the answer is no, because there is no immediately preceding previous year, no data about that. So in that case, they have clarified that since that condition would not be satisfied in the year of incorporation, 194Q will not apply. Now, important points, we'll just cover that. So I think more or less 194Q is, we have discussed that if you are purchasing any goods of value exceeding 50 lakh rupees, and 0.1% TDS will be deducted. It's simple as that. Now coming to very important before we go to the section on 206C1H, let us see something on the TCS. So why TCS was introduced? So you can see there was section 44 AC and 206C, which was introduced in Finance Act 1988. And there was a judgment, a very celebrated judgment of Supreme Court in the case of Sannyasi Rao. And they had mentioned that, basically the crux of the judgment was that whether purchase price can be a source where, basically a source on which tax can be levied. And the court held that yes, based on the purchase price, you can still levy your taxes. Hence, TCS was introduced and they're constitutionally valid. It was constitutionally valid. And this is the chart as far as the TCS is concerned. So you see 206C1, it talks about sale of alcoholic liquor, tendu leaves. They have all separate rates, 1% to 5%. Minerals and lignite, we have 1%. So parking lot, toll plaza, again 2%. You can see here 206C1F. So if you purchase a motor vehicle of exceeding 10 lakh rupees, the 1% TCS is there. 206C1G. Again, we all know these were the provisions which came last year. 1G talks about two things. One is about remittance outside India through LRS, and other is overseas tour package. So 7 lakh limit is only for the LRS. If you are remitting outside India exceeding 7 lakh rupees, then the authorized dealer will collect TCS at the rate of 5%. But for the overseas tour program, if suppose Chintan bhai tomorrow takes all of you to Thailand or to let's say Australia, wherever he takes you as an overseas program, in that case the tour package, whatever the amount is, they have to collect 5% TCS on that, irrespective of the amount. 206C1H TCS on sale of goods. Again, this will be a very hot topic as far as our auditor concerned, because we have seen in this audit, this year's audit, 194Q and 206C1H are perhaps missed at a lot of places. So you have to check each and every transaction for that compliance. 206C1H, we'll again see 50 lakhs, 0.1%, we know that. So this is an overview of the TCS provisions. Now coming to 206C1H, again, like we discussed 194Q, I'm going to just break this section down for ease of understanding that every person being a seller. Now here again the word seller is important, who receives any amount as consideration for sale of any goods of the value exceeding 50 lakh rupees in any year. So you can see the word here is who receives. So receipt is the most important thing here. other than the goods being exported out of India or goods covered under 1F and 1G. So we discussed 1F and 1G. 1F talks about the car, motor car, and 1G talks about the overseas package and all. Shall at the time of receipt of such amount collect from the buyer 0.1% of sale consideration exceeding 50 lakh rupees. So important point is there should be a seller. The exceed he should receive more than 50 lakh rupees from the buyer, and he has to then collect 0.1% as TCS on the sale of goods. So if yes, if there is no PAN, in that case the rate is 5% and not 20%. So again, this is a brief provision. Now, who is the buyer? So very important that buyer includes, buyer does not include a person importing goods into India. So basically, if you are importing goods, then 206C1H is not applicable. They are very well clarified for that matter. Now, definition of seller is the same as 194Q as for the buyer, that your total sale gross season turnover should exceed 10 crore rupees in the financial year immediately preceding the financial year in which the sale is carried out. So now for the current year 22-23, you have to see whether 21-22 your total sales gross turnover exceeded 10 crores or not, for the definition of buyer. Now, meaning of goods is all we will discuss. Now, coming to the practical issues, I think I will share the presentation, so everything will be covered. But now we will discuss the practical issues that I'll cover that straight away. So yes, one is what is the timing of collection of tax. So if you go for the audit now this year, they will say that we have received the amount, we have done it after 2 months. So no, I think the point is whenever you receive the amount, that is a trigger point for collection of tax. It's on the receipt basis. So if you received more than 50 lakh rupees in the financial year, obviously TCS will have to be collected. Now here the question comes about GST, and they have clarified that since it is on the receipt of consideration, amount including GST, you will have to collect TCS. So for example, if you sell goods of 1 lakh, let's say 51 lakhs plus GST, it comes to 55 lakhs, and you receive 54 lakhs. So in that case, on the entire 54 lakhs, TCS will have to be collected. Now, normally there are two modes of collecting TCS. There are few clients, what they do is they, total of the entire month, they raise a debit note, one debit note, they raise for the client and they collect TCS. There are a few set of clients who charge TCS on every invoice, because they know that the amount is going to exceed 50 lakhs, so they charge on each invoice. So there are both the sets are prevalent. Depending upon which is more convenient for a business, you can do that. But we have to also take into account that this limit of 50 lakhs is every year. So suppose you're dealing in a particular client that has 50 lakhs of receipt in this year, next year it might not have. In that case, TCS will not be applicable in the next year. So this limit will also have to be seen. Now coming to a very important comparison, I'll just strictly go through that. Just yes. Now coming to the advance payment, even as we discussed in the goods scenario, even as far as the sales is concerned, and we receive certain advance from the buyer, even on that TCS has to be collected because it's on the amount of receipt. So advance will also be subject to 206C1H. Again, we discussed total invoice value including GST is what is to be considered there. Now coming to straight away to the important point of comparison. We all know, I think very important thing, that TCS, the due date is not 31st of the next month or end of the quarter, it is 15th. So for the March month, it was 15th of May, and now it is 15th of July for the June quarter. Now, straight away coming to the comparison. Yes, this is a very important slide which was clarified by severity. That what about the cross application? Suppose the buyer is required to deduct TDS, and at the same time on the same transaction, seller is also required to collect TCS. So they have clarified that ideally the first responsibility should be of the buyer to deduct TDS on the amount. But in case the buyer could not deduct TDS and TCS was collected under 206C1H, then there is no obligation on the buyer to go back and deduct TDS. So the point is that the transaction should be recorded. So if buyer has not done, if seller has done, then also it is okay as far as the compliance is concerned. So this is a summary table of both these sections. So you can see who is liable. You can say in first case buyer because it's purchasing. In sale of goods, it's a seller who is liable. The limit is 10 crores for both buyer and seller. Threshold for purchase again 50 lakhs same. Rate is 0.1%. Amount again excess of 50 lakhs in each case. In first case it is purchase. In second case, it is sales consideration. And time of collection is most important. In the first case, it is payment of credit, whichever is earlier. In 206C1H, it is at the time of receipt. Whenever you receive, you have to collect TCS. Now the question normally comes in, I have done sale in the year 1. In the year 2, I received the amount. So irrespective of whenever you've done the sale, whenever you receive, TCS will have to be collected. So even in year 2, TCS will have to be collected. Now preference, as I said, the first preference will be given to 194Q, and if not deducted, then in 206C1H will be the second preference. So this is all done now. Now coming to Finance Act 2022. Now there are, if you can see, there are 6 major TDS sections which were either amended, and there were 2 sections which were introduced newly in the last Finance Act. So we will discuss 194IA first. 194IA, TDS on transfer of immovable property. I think we all know this section. I will just read the first paragraph for the clarity. That any person being a transferee who is responsible for paying to a resident transferor. Again, the word here is very important, resident transferor. If the transferor is non-resident, it will go to 195. So any sum by way of consideration for transfer of any immovable property shall, at the time of credit of such sum or at the time of payment, deduct an amount equal to 1% of such sum. Now this is the new addition that they have done, or stamp duty value, whichever is higher. So normally what used to happen is, suppose my stamp duty value of a property is 55 lakhs, and I used to do my sale consideration is 45 lakhs. In that case, there was no TDS liability. But now every time and anytime whenever we have this purchase of immovable property transaction, we have to compare the sale price, the purchase price with the stamp duty value, and then whichever is higher, we have to deduct TDS on that value. So this is a change that was there in this section. Then there was a rationale. So even in the memorandum, they have explained that why this change was brought in. They've made sure that in order to remove inconsistency in 43C and 50C, it was proposed to amend this section. Now, my first question to all of you when you talk about 194IA is that what if suppose the seller does not have a PAN number? In that case, what is the rate on which I have to deduct the TDS? In 194IA, we discussed that we have to deduct TDS if the consideration or the stamp duty value, whichever is higher, exceeds 50 lakh rupees. But in that case, normally what happens as far as the farmers are concerned, they're having agricultural land or any land, land on which, but they don't have any PAN card. So in that case, how do the buyer and what rate does the buyer deduct TDS? Anybody can, you can reply in the chat box. What is the rate under which TDS should be deducted?
Pardon, sir? Rate for what, sir?
So normally, when you talk about TDS on immovable property, what happens that the buyer and seller might be a, let's say, a farmer who is not having a PAN card. So buyer will have to deduct TDS. Then if the seller is not having PAN, on what rate the buyer will have to deduct TDS?
20%.
Sorry?
20%, 2020.
20, okay. So here the answer, what you have given is right, but practically the answer is no, because what happens when you fill the form 26QB, it is compulsory field to write a PAN number there. So even though the act gives us an option of deducting 20%, but we are not able to fill the form until unless PAN number is given there. So for farmer or anyone, we have to first apply for the PAN card, then deduct 1% and file the form. It's a practical issue, but yes, since since it has come in 2015-16, whenever it came, since last 5-6 years, we're facing this issue that we have to apply for the PAN card. There's no other option. So it will be at 1% only with the PAN number compulsory. So 194 IB, we discussed IA. Now in IB, what was the change? IB, we all know that it is basically for those individuals or HUF which are not subject to audit. So in a very simple manner, there's a salaried person or there is a person who is not having a turnover of more than 1 crore or 50 lakh rupees. In that case, if he's paying a rent for the house, in that case, 5% of such amount should be payable as TDS. Now again, the government has done that 50,000 per month is the rent expense that he has to bear, and there's a very simplified form for filing to file, like we have 26QB for TDS on immovable property, the 26QC for this, again a very simplified form. What change they have brought in is they have removed this 206AB, they have removed now. So 206 AB talks about that if you have not filed the return for 1 year and if the amount is more than 50,000, then you'll be a specified person and 20 and double the rate will be the TDS. So that section has now been removed, and what the rationale they have given is that we don't want to put in the additional burden. So they've removed that 206 AB wala thing from this section. The rest, all the entire section remains the same. And now coming to the most important section, I think which I think most of us would want to read in detail about the 194R. Now, TDS on benefit or perquisite in respect of business or profession. Now, I will just read the first paragraph. I think we'll be having a lot of doubts in that only. Any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession by such resident, shall, before providing such benefit or perquisite, the word is before providing such benefit, as the case may be, to a such resident, ensure that tax has been deducted in respect of such benefit at the rate of 10% of the value or aggregate of value of such benefit or perquisite. So they talk about the benefit and perquisite. My first question here is that what is the benefit of perquisite? It has not been defined in the Income Tax Act, neither in 194R nor in the general definition. Anywhere benefit or perquisite words are not defined. So again, we have to go to the general meaning, which talks about any additional comfort, any additional benefit that we get. But here you can see here what are the challenges here. Obviously, the limit is 20,000. If the amount exceeds 20,000, you will have to deduct TDS. So I'll give you an example to explain this section. For example, there is Mr. A who lives in Ahmedabad and he wants to do business with Mr. B of Bombay. So what does he do is he Mr. B is a big wholesaler. So he visits Bombay, and when he visits Bombay, Mr. B just to make him to treat him well, he books hotel for Mr. A. He gives him a watch. He gives him a car facility and everything. And when he comes back, Mr. B gets a good amount of business from Mr. A. So whatever Mr. B has provided to Mr. A in Bombay, for example, a gift of a watch, or let's say stay in the hotel or a car facility, whatever benefits he has given, which is arising because of the business connection, in that case, those benefits are then covered under 194R. So while Mr. B would be taking that as a deduction in business profession, Mr. A will then have to show it as an income in his books of accounts. So what happens normally? The first question is that ये दिखाता कौन है? Who shows this income? That is the exact reason why this TDS was brought in. If you see the memorandum of Finance Bill 2022, it has specified that since the receipt is not shown anywhere, they want to introduce this section just to make sure the receipt is shown. So, for example, now how will be valued? वो सब चीजें उन्होंने circular में clarify किया है. So we will discuss that how that watch will be valued or how that benefit of the hotel will be valued. But whatever the amount is there, Mr. A will have to then show it as an income in his books of accounts for the income tax purposes. Now, coming straight away to the summary. Any person is a payer. Payee should be a resident. 10% of aggregate of such benefit or perquisite carrying on from business or profession. Okay, no TDS if the perquisite or benefit is up to 20,000, and if the payer is individual HUF, then his total sales or turnover does not exceed 1 crore in case of business and 50 lakhs in case of a profession. Now, coming to the important point here, this is a circular. Now, the first question is it necessary that the person providing benefit or perquisites needs to check if the amount is taxable under clause 4 of section 28 of the Act before deducting TDS? So, what does clause 4 of section 28 talk about? Clause 4 of section 28 talks about a very important thing, that is any business or any benefit or perquisite which is arising due to profession or business. So now if Mr. B is making a payment to Mr. A, has Mr. B to check whether this falls under what 24 clause 4 of 28? And the answer is no. They have clarified in the circular that whatever, whether it's an income of the other person, whether he shows as a capital asset, whatever the other person shows is immaterial. The deductor will have to deduct TDS on that section under 194R for the section of the amount of benefit provided. So in that case, we don't have to see whether whether it is falling under clause 28(4) or not, but we have to see from our side whether we are providing a business and benefit or perquisite, then yes, TDS will have to be deducted. Now, a very important question, whether the benefit or perquisite should be in kind for 194R. The answer, again, they have clarified via this circular that there could be situations where the benefit can be partly in cash, partly in kind, or fully in kind. Under both the situations, yes, 194R would be applicable. So the third question is whether it is form of the capital asset. So suppose if I give any benefit of purchase which is in the form of capital asset, as I said in the first point, that it is immaterial how the recipient deals with it. So even if it's in the form of capital asset, in that case also TDS will have to be deducted under 194R. They've given examples in the in this guidelines which they have issued on 16 June, and they very well clarified this. Now, most important thing, whether sales discount, cash discount, and rebates are benefit or perquisite. The answer that they have given in the guidelines is that yes, they are perquisite. Obviously, if you give a sales discount or a cash discount, they are incentives, they are perquisites, they are benefits. But they have mentioned that to remove difficulty, they have mentioned that though they are benefit or perquisites, they are not covered under 194R. So they have clarified. This was the biggest issue that I think a lot of trade associations also had raised. That you can see here, logically, these are also benefits, though related to sales or purchase. Since TDS under 194R is applicable on all forms of benefits, tax is required to be deducted. However, it is seen that subjecting these to tax could put seller in difficulty. To remove such difficulty, it is clarified that no tax will be deducted on sales discount. So, for whatever cash discount, sales discount, rebate you give, there is no requirement for giving TDS under 194R. The most important question that we all had when the section was out was what was the valuation? How to value this benefit and perquisites? Again, they have clarified here that there are two cases. One is that either you purchase something like, for example, you purchase a laptop, you purchase a watch, and then you give it to the person X. In that case, the purchase price shall be the value of such benefit and or the perquisite. And second case, if you're a manufacturer, for example, if you're a manufacturer of a watch and you give the gift as a watch to one of your clients, in that case, what price you charge to the customers for that watch, for that item, will be the value of benefit and perquisites. So both conditions they have clarified. One is if you purchase something and give the purchase price, but if you are manufacturer of an item, in that case, whatever the selling price you charge to the customers, that will be the valuation purpose for that valuation purpose. Important, they've clarified that GST will not be included for the purpose of valuation. So only the basic purchase price and only the basic selling price that you have will be there for the purpose of valuation. Now, yes, nowadays a lot of social media influencers are coming in. You see, there are a lot of people who are active on Instagram, on Facebook. Basically they sell their products. For example, if somebody is promoting a very good eatables, let's say some let's say uh, a good product which is which is recently launched in the market. Now there's a social media influencer who has a lot of followers on Instagram, a lot of followers on Facebook, and that person is promoting those products on the Instagram just to make that they make sure that they are selling that product. Now the question is that product given to influencer a benefit or a perquisite arising out of business or profession? And they have clarified in the circular that yes, if that product is given to an influencer and the influencer keeps with himself or herself, then yes, TDS will have to be deducted. But if it is not retained and that product is given back to the manufacturer, in that case, it will not be a benefit or a perquisite. So again, this is something which they have clarified. Now, reimbursement is a burning question. I think there are a lot of different views in this, that whether reimbursement will be a benefit or perquisite. The normal view that they have taken a circular is that if you are paying something on behalf of someone else who is actually supposed to pay, in that case, yes, TDS will have to be deducted under 194R. Now, dealer conference, I think they have clarified this, that if the dealer conference is there only for educating the dealers about the products. For example, if I keep a dealer conference and I call all my dealers and educate them about the product, in that case, it will not form part of benefit or perquisite. And they have clarified here that the prime objective should be to educate dealers about any of the following topics. So what they have introduced is either new product launches or discussion how the product is better than others, teaching sales techniques, addressing queries, reconciliation of accounts. If you do all these things, in that case, it is not benefit or perquisite. It is just a normal education dealership workshop that they are doing in. But suppose if you provide any incentives or benefits to the dealers for the workshop, or you do any of the following these acts that they have mentioned, that you give a leisure trip or a kind of a family members are also given that leisure trip along with the incentives. You may have a participation on the conference days. So normally what happens, if you do all these things which are other than the educational thing, in that case, yes, 194 hour would be applicable. Now, a very strange thing is mentioning here in the point number 3, that expenditure on participants or dealer or business conference for days which are prior to the days of the conference. So what they want to say is, for example, if let's say Chintan Bhai invites someone on morning lecture of 9 o'clock. Now, if you come from Delhi or come from Bombay or anywhere, I think the earliest flight would not reach Gandhinagar before 11 or 12. If you come to Ahmedabad and come there, so you have to come one day prior. So normally what happens, business dealer conferences, they come one day earlier. So in that case, they will now argue that don't come one day earlier, come only on the day of the event. Because if you come one day early, then that expenditure will be considered under 194 R. So these are very gray areas that they have brought in. They should be clarifying it. And I think there are suggestions going on in the industry that now they should come up with a negative list. For example, on these things, 194 R will not be applicable. Like how they've done for the sales return, for the for the discounts and everything. They should also clarify a lot of things on which 194 hours should not be applicable. But on these things, if you see, normally they have this incentive deal that if you achieve a particular target, you'll be given a Europe tour or a Thailand tour, or let's say an Australian tour. Wherever you go for the tour, in that case, it will be considered as a benefit and perquisite, and 194 hour would be applicable. Now, another important thing regarding the samples. So normally what everybody says that that samples are given to doctors. You all know that they are given samples. Now, giving a overseas package to doctor as a promotion will fall under 194 R. But if you give free samples to doctors, they have mentioned in the guidelines that yes, it will fall under 194 R. But I would beg to differ, because normally there are judgments also that on the samples, doctors cannot resell those samples. It is not a benefit or a perquisite that doctors are getting it. It is just basically a kind of a marketing tool that the companies do. So on samples, they have clarified that TDS would be there, but again, it's a subject matter of litigation. Now, the most important question, that what if the 194 R is given, for example, in kind. So, for example, Chintan Bhai goes to Bombay and one of his clients gives him a Rolex watch. So how would his client ensure that Chintan Bhai has paid the tax, or how would the things work? Because if it is in cash, partly in kind, yes, the cash portion can take care of the TDS. But if there is in kind, or partly in cash and partly in kind, and the tax portion is not sufficient to take TDS, in that case, how the TDS will be done? So again, department have clarified this thing, that whenever there is in kind, in that case, the recipient would pay the tax in form of advance tax. So here, if suppose the client is gifting Chintan Bhai a Rolex watch, Chintan Bhai will have to pay an advance tax on that, give the advance tax copy challan along with the declaration to his client that see, I have paid the advance tax, and that advance tax challan along with declaration will have to be reported by the deductor in his TDS return. So before 2 days, they have also, they have updated TDS return also now. So in TDS return, there is a separate column where they can show 194 R, and they can show whether advance tax has been deposited or not. So now Chintan will have to then pay advance tax, give the challan of advance tax, and then the return will be filed. Now suppose his client is good enough that says that no, Chintan will not pay the tax, I will only bear the tax on my behalf. Then what he will have to do is, he will have to then gross up the amount. So for example, if the Rolex watch costs 50,000, so 10% comes to 5,000. So we'll have to then gross up 55,000 and then deduct 10%. So that grossing up will have to be done, and TDS will have to be borne, because whatever tax portion is being borne by the company, that is also a perquisite. So they have clarified that 55,000 and tax will be deducted on that. In that case, again, TDS will have to be deducted. So there are two things: either the recipient himself pays the TDS, advance tax, gives a challan and declaration, or the person who is providing can deduct TDS on the gross up basis. So this again things they have clarified in the guidelines that they've been issued. Now again, yes, one thing they have clarified, that since it is coming into effect from 1st of July, how this 20,000 value will be calculated. So they have mentioned that for the purpose of 20,000 rupees, 1st April 2022, the limit will start counting. For example, if you have provided any benefit or perquisite of let's say 25,000 till 30th of June, In that case, your limit is exhausted, and for 1 rupee also you will have to deduct TDS going forward. But any amount which has been paid or provided before 30th of June, no TDS will be deducted on that amount. So they have clarified this again in the circular that we have to see it from 1st July onwards. So as I mentioned that the rationale of this section, as I was saying in the beginning, that in many cases recipient does not report the benefits in the return. So that was the reason why they have now come up with the form where the TDS will have to be deducted on such and so amount. Now, yes, there are a few situations we can discuss here. If the recipient is a resident, payer is a resident, TDS, yes. If the resident, if the payer is a resident and the recipient is a resident, any person, but the resident is having, the payer is having turnover and gross receipt less than 1 crore, then 194I will not be applicable. If the payer is a non-resident, but the recipient is a resident, then yes, 194R would be applicable. And the other way around, if the non-resident, then no, because 195 is already there for non-residents. So now I think coming to a very important section, you all would have guessed by what I'm talking about. It's about the virtual digital assets. We look at Bitcoin. It's just one of the cryptocurrencies. There are so many cryptocurrencies. So with the Finance Act 2022, we have seen now that the virtual digital assets which have gained tremendous popularity in the recent times. You can see a lot of people are trading into VDAs either through exchanges, and the Finance Act 2022 had introduced a flat rate of 30%. Section 115 BBH was introduced on the virtual digital assets, regardless whether it's a long term or a short term. So it is now flat 30% reduction tax on the VDAs. Now, so in line with that amendment, 194S was introduced, TDS on payment on transfer of virtual digital asset. So what they've mentioned is that any person responsible for paying to a resident any sum by way of consideration for transfer of a virtual digital asset shall at the time of credit or payment of such sum, whichever is earlier, deduct an amount equal to 1% of such sum as an income tax thereon. So we all know VDAs, 1% TDS will have to be deducted. So very important, provision of 203 and 206 AB shall not apply. And for specified person, if you're a specified person, the limit is 50,000. If you're a non-specified person, the limit is 10,000. Now, who is a specified person? We'll discuss that. Yes. So specified person, as we said, limit is 50,000 rupees. Specified person means any individual or HUF whose total sales, gross sales or turnover does not exceed 1 crore in case of business or 50 lakhs in case of a profession during the immediately preceding financial year. And in case of an individual or HUF, if is not having any income under the PGBP, in that case, the limit is 50,000 rupees. Otherwise, the limit is 10,000 for the purpose of TDS reduction. So again, as we discussed for the this 194R, there were also a circular issued on 22nd of June, just before 2 days, on 194S, and that circular was basically a guideline for removal of difficulties under 194S subsection 6. So there were a few important clarifications. I think the crux of all the clarification I'm going to tell you that normally there was a question that if the VDA transfer takes place through exchange, then who is going to deduct TDS? That was a basic question, and they have clarified that TDS deduction will now have to happen at the exchange angle, exchange side. So the exchange through which the purchase and sale of transaction is happening, they will have to deduct TDS for any of the VDS that will be transferred to the exchange. So this is going to be a lot of compliance burden on the exchanges now, because it will be difficult for them to keep a track and then deduct TDS on that basis. So this all the clarifications you have mentioned here. Now there was another question regarding the provision of applicability of 194Q. So they have mentioned that irrespective of whether a virtual digital asset is a goods or not, it is clarified that if 194S deduction is done, there is no required to deduct TDS under 194Q. Then whether it will be on the gross basis including TDS, GST, or on the net basis, and the answer is it will be without GST. Excluding GST, the net consideration will have to be seen. Now, yes, this example they have given. So, okay, again the same thing regarding the threshold limit of 50,000. You have to consider from 1st of April till 31st of March, because it's mentioned about the entire financial year. But when it comes to deduction of TDS, it has to be only on the amount after 1st of July 2022. Now, a very important section 206 AB, which was introduced last year, which was basically modified last year. that if you don't file your returns on time, earlier there was 2 years, now it is 1 year, then your tax will have to be deducted at the higher of the following three rates: at twice the rate specified in the provision, twice the rate in force, and at 5%. So, for example, we will discuss with the example now. Suppose there's a deductor, let's say under 194J, professional, and he has unfortunately not filed the ITR for the last year. In that case, and the total amount of TDS, total cumulative amount exceeds 50,000 for that particular person. In that case, instead of 10%, I have to deduct rate of 20%. It will be twice the rate or 5%, whichever is higher. So for the 5% thing is basically for 194C, where the rate is 1% or 2%. So twice the rate will have to be deducted. Now, who is a specified person? It's very important now. The changes are highlighted here in the red and in the black. I've deducted that. So specified person means a person who has not furnished. So earlier the word was filed. Now the word is furnished. The returns of income for the assessment year relevant to the previous year immediately within the financial year in which the tax was required to be deducted. So for example, we will read the entire thing now, for which the time limit for filing return under 139(1) has expired. So as we stand today, only for the financial year 2021, with the assessment year 21-22, the time limit of filing 139(1) has expired. For the current year, that is like for the year in question 21-22 financial year, the limit is still there. We have 31st of July. So we have to see whether he has filed return for the financial year 2021. If the answer is yes, if the answer is no, and his total aggregate of TDS and TCS combined is exceeding 50,000 rupees in that year, in that case, that person will be a specified person, and TDS will have to be deducted twice the rate or 5%, whichever is higher. Now, how to check this? Because what happens normally, we all know that this is to be checked, but how many of us actually do it? We have to check it at the beginning of the year. Like in the month of April, we did it for all our clients. What they do is there's a functionality. We're going to discuss that functionality also now. I think we can just see this section. In this section, you can see in which cases this section will be applicable. So all the sections other than this. So if you see for the salary, or if you see for 194 IA, IB, and IM, these sections will not be applicable. Like this twice the rate, and this section will not be applicable. So this is the one in the green are the ones who have been modified in the Finance Act 2022. And similarly for TCS, as we have for the TDS, similarly for the TCS, if you don't file the return, and if you have a TCS and TDS exceeding 50,000 rupees, in that case again the twice the rate is applicable. Now for both, how to check it? Now the most important thing, as I said, they have come up with this functionality, compliance check functionality for section 206 AB and 206 CCA. This is recently they have issued in the month of June an entire guidance on this, which basically supersedes the one which they had issued in 2021. I will take you straight away to the important point. So this compliance check functionality, I think what happens normally for all the deductees, what we do is at the beginning of the year, what we do is we basically put, there's an option of first registering yourself. So the SSC will first have to go to the reporting portal, and then they will have to have a new registration. After registration, then they will have to select which form type, entity category. After that, they will be given this PAN and password for that, for logging in. Once they log in, you can see here they have this compliance check option for 206 AB and CCA. So what they can do is they can check individually PAN wise, or they can also do a bulk search. So they have a CSV file where they can do a bulk search. So if you have, for example, you have 100 directories, so what you can do is you can have a PAN number of all the 100 directories mentioned there in the CSV file, upload it here, and you can check out of those 100 employees how many are specified and how many are non-specified. So for the non-specified, suppose you have 95 non-specified. In that case, for those 95, you don't have to check it for the entire year. If they are non-specified at the beginning of the year, the status will remain the same. But for those 5 SSCs, which are specified SSCs, and you're deducting twice the rate, you will have to check, during the year also, if they have from specified, have they come to non-specified. For example, if they have filed the return, or if they have done the compliance, in that case, the TDS will not have to deduct it at the higher rate. So that compliance check will have to be done. So make sure that we do this compliance check for all our clients, or we train them that they have to do it at least once in a year at the start. And for all the specified ones, even during the year, this check will have to be carried on. Now coming to finance 2021, you can see 194Q we have already discussed. 194P talks about the specified senior citizen. I'll quickly take you this that government has come up with this scheme where if you're a specified senior citizen, in that case you are not supposed to file the ITR. Now they have come up with a they have come up with a very detailed guideline that the specified bank there are certain guidelines, and they talked about that this is the thing. If you are a specified senior citizen of the age of 75 years and above, and you are having income in the nature of pension and no other income except the income of interest receivable from the saving account in the same bank. So if you're a super senior citizen, you're a specified senior citizen of more than 75 years of age, you're getting pension income and you're getting only interest income from the bank on which the from in which the pension is received. If these conditions are fulfilled, then there's a declaration form, and if you give the declaration form to the bank, then there is no need to file the ITR. The bank will deduct TDS, and in that case, ITR is not supposed to be filed. This was a provision which was brought in 2021. Now, after that, coming to Finance Bill 2020. So, Finance Act 2020, there were 5 sections, a few new amendments, and a few new sections. So, 194A, they have come up with a very good change that, normally there's an exemption. If you see 194A3 subclause 5, it talks about that 194 TDS is not applicable to income credited or paid by a cooperative society to a member, or to such income credit to pay to a cooperative society to any other cooperative society. So if a cooperative society pays any income to its member or to any other cooperative society, in that case there is an exemption. But they have now brought in a proviso, and they have mentioned that this exemption will not apply to those cooperative societies who have a turnover exceeding 50 crores in the immediately preceding financial year, and the amount of interest is more than 50,000 rupees in case of a senior citizen, and 40,000 case in case of any other assets. So this change was brought in by the Finance Act 2020. Now 194J, professional and technical. I think the most important part is we all know professional is 10%, technical is now reduced to 2%, and royalty is also 2%. And there was a change as we discussed on the call center. Again, those services are at 2%. Now this is a chart. This was about 194N. In this year, they had made changes in 194N. You can see in 194N, in case of a payer is a banking company or a cooperative society or a post office, who is a payee? Payee is an individual HUF company, partnership firm, a local authority, AOP or BOI. And at the time of payment, they have to deduct the TDS if the cash withdrawal is more than 1 crore. Now they have brought in an amendment where they had mentioned that it depends upon whether you have filed ITR or not. So if you have filed the last 3 years ITR, in that case, then if the amount is exceeding 1 crore, TDS will be at the rate of 2% of the amount. So 2% TDS will have to be deducted on the amount excess 1 crore. If you have not filed any of the ITRs of last 3 years, in that case, there are two thresholds. One is up to 20 lakhs, no deduction. 20 lakhs to 1 crore, it is 2%. And excess of 1 crore, it is 5%. So this is a deduction as far as the 194N is concerned. Now coming to 194O, payment on certain sums by e-commerce operator. Again, I'll give you a simple example. For example, I am an e-commerce participant. In that sense, I am basically Mr. X, who is a seller, and there is an Amazon, which is the platform, e-commerce operator, which is the platform, and there is a Mr. Y to whom I am selling. So if Mr. X is selling to Mr. Y through Amazon, through an e-commerce operator, in that case, whatever amount Amazon pays to me, for example, I'm selling through Amazon, the buyer pays to Amazon, the Amazon pays to me, whatever amount the Amazon pays to me as an e-commerce participant, TDS at the rate of 1% will have to be deducted. If my the amount is more than 5 lakhs. So this again, e-commerce operator to e-commerce participant example, this was there last year which came in, and I have one poser for that also. I think a very important poser which will clarify a lot of things. For example, if a querist company is a founder developer of a app, let's say at Heal, which provides all kind of medical services pan India, they are paying lower less aggregators through which they are connecting customers to professionals. So they have a mobile app. On the mobile app, they are giving an option that the persons can come and take medical services. Now the query is whether TDS will be rejected under 194J as far as the professional services are concerned, or under 194O as a e-commerce operator to e-commerce participant. So that was the question. Anybody can come up with the can give us an answer for what it can be. I hope the question is clear. So the company is basically a developer and founder of an e-commerce website, a mobile app, which provides all kind of medical services at doorstep. So, for example, if you need a doctor, you can go there and place an appointment. Doctor will come to your doorstep. If you need any other medical support, they can do that. So, whether TDS will be deducted on 10% as far as 194J is concerned, or on 1% as far as 194O is concerned. Uh, I don't see any answer on this. Okay, so the answer here is that 194O is having a overadding effect. If you see these wordings, I'll show you the wordings now. That as far as the 194O subsection 3, it talks about that notwithstanding anything contained in part B of this chapter. So chapter 17, which deals with TDS part B. So notwithstanding anything contained in part B of this chapter, a transaction in respect of which tax has been deducted by the e-commerce operator under subsection 1 shall not be liable for deduction of source under any of the provisions of this chapter. So if TDS is done under 194O, then 194J is not required. So here in this case, if you look behind the reasoning of the introduction and also the section, 194O TDS should be done at 1% here. So this we have discussed already. Now, yes, 197B we have discussed. Okay, now coming to another two important sections that we have, 194 IC and 194 M. So 194 IC is a very important section. Notwithstanding anything contained in 194 IA, since it is again for the immovable property, any person responsible for paying to a resident any sum by way of consideration, not being a consideration in kind, under the agreement referred to in subsection 5A of 45. So we all know subsection 5A of 45 deals with the joint development agreement. Shall at the time of payment or credit of such sum deduct an amount equal to 10% of such sum as an income tax. So we all know about JDA, how it functions. You know, there's a developer, there's a landowner. So whenever the amount is credited or paid by the developer to the landowner, TDS at the rate of 10% will have to be deducted. So this was brought in by Finance Act 2017, 19, but the JDA was in 2017. Now, one of the very important sections which normally people miss out is 194M. We have a case study also for this. So any person, being a person, individual or an HUF, other than those who are required to deduct under 194C, H or J. So before that, let me ask you a simple question. What are the limits under 194C or 194J or 194H? Whether TDS will have to be deducted, you know, normally we see that the individual HUF should be having a turnover of more than 1 crore, or business profile is more than 50 lakh rupees. Whether that amount is specified or it is still linked to 44AB, clause 1, clause A and B. You got the question? So, for example, if you read section 194C or 194H, they mention that this is applicable to individual and HUF, right? Who are having, you know, there are two options. Either we link it to 44AB, you know, for subclause A and B, or they specify whether the limit is 1 crore of turnover and 50 lakhs of receipts. So, as per your understanding, what is the correct thing? What is there right now? So if you read the sections 194C applicability, everywhere they have removed the words subclause A and subclause B of 44AB. So if you read the Finance Act before 2020, all the Finance Act, you know, all the sections have a reference of subclause A and subclause B of 44AB. But now they have removed that, and they have mentioned that these sections will be applicable if the turnover is exceeding 1 crore and the business profession is exceeding 50 lakh rupees. So normally what happens at times, suppose your client is coming with a turnover of 5 crores and you don't have a tax audit because there is no cash transaction. In that case, though tax audit is not there, but in that case TDS provisions will still apply. He will still have to comply with 194C and 194 and 194J, because in those sections the limit is not 1 crore, it is not 5 crore, this 10 crore, it is 1 crore only. So this is a very important thing that most of the professionals miss out, because if tax rate is applicable, then only TDS is there. That condition is now gone. You have to see the individual sections also now. So 194M talks about any person being an individual or HUF other than those who are liable under 194C or H or J, who is responsible for paying any sum to any resident for carrying out any work in the pursuance of a contract or commission or brokerage or professional fees and the amount exceeds 50 lakh rupees, then TDS of 5% is to be deducted. Now, the example is simple. For example, if let's say Chintan Bhai is paying a professional fees to a doctor and the amount is exceeding 50 lakh rupees. So even if he's not liable to deduct under 194 J or something because he's not specified in the criteria, in this case he will have to deduct TDS at the rate of 5% under 194 M. So yes, so these are the you can see it is with effect from 1st September 2019 and threshold limit is 50 lakh rupees. Now there's a posers. I think if we can see these posers, if anybody can answer that Mr. X is an individual and he makes the following payments to resident consultant, by way or resident contractor. The amount of payment is 27 lakhs on 10th August and 26 lakhs on November 22. The following situations are examined. So if X is a businessman and turnover of the business is 15 crores, payment to consultant or broker is for business purpose. Now whether 194M would be applicable or not, that is the question. And you can reply it in the chat box for those who are actually active here. So for the first answer, the answer is that since 194C would be applicable because the turnover is more than 1 crore, in that case it will be going under 194C as a consultant or a contractor, 194J if it's a consultant, or 194C is a contractor, and it will not be under 194M. Second is, if X is a businessman, his books are not audited in the immediately preceding financial year as turnover is less than 1 crore. Now payment is for a business purpose. In that case, so here you can see that the audit is not there. So we have to see now whether 194M would be applicable. The answer is yes, because the payment in aggregate exceeds 50 lakh rupees, 27 plus 26 comes to 53. Hence, TDS under 194M will have to be deducted. Now, payment to a consultant is for personal purposes. Whether TDS under 194M would be there?
Yes.
The answer is yes. That was the basic objective of getting this, getting this section, because even in this case, the answer is yes, because he is not liable under 194C or any other section. So he'll have to deduct TDS under 194M. Now, X is a raw non-resident Indian. That he does not have any income in India, but he makes any payment to a consultant for personal purposes. Whether 194M would be there? The answer is yes, because there is no exception to non-resident also. And similarly, for X is a farmer, his entire income is exempt. So like we saw, there was a clarification under 194P or 194Q. In this case, there is no clarification. And even if whatever amount the farmer is paying to a contractor for personal purpose, amount exceeds 50 lakh rupees, TDS and 194M would be applicable. So what happens normally, we have big marriage functions where the contractors are there. We pay more than 50 lakh rupees to them. In that case, we have to be very careful that even if you're not subject to audit, TDS and a 194M would still be applicable. The solutions I've given in, you can just go through it. So there were a few recent circulars. I think we have discussed a lot of them. Most of the questions, dealing with the circulars we have put in here. I've just reproduced those sections for the sake of understanding. Just a few practical issues. I think normally this is a question that we all face. That if payment of credit is in the month of, let's say, 28th of January, we have an amount of deduction of 5,000 and we deduct on 7th of March. So normally how many months interest we calculate? So the answer is 3 months. Yes. So again, this is something which normally softwares they are now used to it, but there are a lot of softwares who take it as 2 months. Plus, if you do it on 31st of January, they take it up for 2 months because they are considering only February and March. So this is something which I think we need some clarification, because normally the wordings go, yes, we have to take for 3 months only, but normally they do it as a 2 months also. Now coming to this question again, ABD is a practicing CA and his gross receipts during the previous year are 55 lakhs and he wants to make the following payments. Now you can see here his gross receipts are 55 lakhs, so he's subject to tax audit and is again falling under all the limits under like 194C or whatever we can say. Now the first payment is he is making 94,000 to a contractor for repairing of flat exclusively used for residential purpose. So whether TDS will be applicable here?
No.
Okay, the answer is no. Okay, we'll come back to the answer. Second, he gives 78,000 to a contractor for repairing his office. Will he fall under 194C? The answer is yes. In the first, the answer is no. We will discuss why. In the second, the answer is yes, because there's a one bill exceeding 30,000 rupees. In that case, he'll have to pay deduct TDS under 194C. Now he pays 1,05,000 for hospitalization of his for his operation. So again, it's a personal expense. Whether TDS will be deducted. So if for example, if you're going to hospital, whether you will first deduct TDS and then make the payment.
No.
Yeah, logically the answer should be no, but we will see why it is no as per the section also. And the last is if he pays 2,50,000 to a landlord towards rent of flat exclusively used for residential purpose. So if he pays a rent of more than 2,40,000 and exclusively used for the residential purpose, in that case, so I'll just clarify. In the first case, when he pays to a contractor for a flat exclusively used for residential purpose, the answer is no, because it is exclusively for residential purpose, right? In second, the answer is yes, because he is paying for his official business expense and the amount of bill is more than 30,000 rupees. Third, again, it is 1,05,000. It is for the personal expenditure. In that case, TDS is not there. But in the fourth, even though it's for the personal expenditure, logically, as far as the section is concerned, TDS will have to be deducted. And I'll tell you why. Because if you see this, there's a line in each and every section that no individual HUF shall be liable to the TDS if the sum is paid exclusively for personal purposes, right? Now, this sentence, this line is only forming part of 194C and 194J. You can read the act in 194I. It is no, there is no mention of this section, this lines. I know even the income tax officers might not be aware. It's a different matter, but when we are reading the fine line, we should be aware that this line that personal expenditure is not TDS is not to be deducted is not forming part of 194I. So logically, we'll have to deduct TDS. But yes, most of them they don't do it. But yeah, but it is required to be done. So I think we have covered all the most of the most of the section as far as TDS are concerned. We'll now quickly go to the summary. Like the DP, we all know there are a lot of different interpretations for the DP. Drawing power is a double payment, that double premium, all these things are there. But now we'll just close about the TDS when we talk about DP. D stands for a lot of things that the deductor will have to then decide, has to carry out, decide. So whether it is liable or TDS, we have to decide that, determine which section it is under following, because now the percentages are vary. So we have to determine which section under which it is following. Deduct the payment paid to the government before 7th of the next month or up to 30th of April. Deposit. Now after paying and after the due date, we have to deposit it within due date. Correct description. Very important. The TDS that we file, they have to be filed correctly, because now quarterly we are issuing TDS certificates also. So we have to make sure that it is all done, especially for issues like transport payments, because where we are not deducting TDS. So if there's a transporter payment and he has less than 10 trucks, he gives us a declaration and a PAN card and we are not deducting TDS. In that case, you have to make sure that the flag, it is properly flagged in the TDS return that it is for the transport payment and no TDS is deducted. So we also missed out on 15G and 15H payments. So for example, if you pay any interest to a person who has given us 15G and 15H forms, we have to show those details in the TDS return and put it on a tick mark that they are under low deduction category. So those are things are very, very important. Another D, for download the certificates within prescribed timeline. Deliver, obviously after downloading, give it to the payer, and we have to be updated on knowledge as far as the TDS is concerned. Coming from D to P, P is very important. We talk about penalty. we all know that the interest rate is very heavy, 1.5% per month or part of month. For each month of default, we have to pay interest. Penal interest, we know. Late filing fees under 234E, we also know it is 200 rupees per day. Then, for the prosecution is concerned, nowadays a lot of issues, a lot of notices are getting issued for as far as prosecution is concerned. So we have to be very careful. Publicity. Now, I think you all have seen that on Twitter and on other modes, they're also starting to publish the name of the defaulter. So it's a negative publicity, adverse publicity for the clients. So it's important to avoid this 30% disallowance and rather pay taxes, pay TDS on time. So concluding note, I think I'll quickly take you to this note, which I still like in the COVID era. Narendra Modi just mentioned that that in the new business model that they is mentioning about, that there were vowels was the new normal, because like vowels in the English language, he had come up with the new vowels now after the pandemic, and which are very much applicable to us. So A stands for adaptability. So he had mentioned that now we have to be all adaptable to digital payments and telemedicine. So for example, even as chartered accountants, we have to be adaptable. Our clients send us data on email, they send us soft copy on cloud. We can't now enforce कि हमको physical copy चाहिए. हमको ये चाहिए. We have to now be adaptable in the digital era. Efficiency, I think we as chartered accountants will now have to improve our efficiency, improve our productivity more than the appearance of effort. So rather than that, we have to improve our productivity, which is most important. Inclusivity, he has mentioned about the care for the poor. Opportunity, skill sets, I think very, very important. There are so many opportunities for us. As I mentioned in the beginning of the slide, there are so many recent happenings and recent changes which are happening. So we have opportunities in almost all the sectors. So we have to capitalize on that, and that will happen only if we develop our skill sets. And universalism, obviously, now CAs also find a global relevance and application in their area. So this is a concluding slide that I would like to put before I end now, is that we all have seen this picture, the old crow that we have seen during our school days, that the perseverance, he used to pick up the stones, get the water and drink and go away. But now it's time for us as chartered accountants to become modern crow. We have to now adopt ways and means which save our efforts. At the same time, we update ourselves on a daily basis, which is very, very important. So with this, I just conclude my presentation as far as the TDS is concerned, and we have 20 minutes for any 15-20 minutes for any question answer that you might have.
There is one question.
Yeah.
If there is a first year of the tax audit, and it is applicable from this year or next year?
First year of tax audit.
Yes.
The TDS will be applicable from next year. But again, I'm telling you, the most important thing is not to look at the tax audit limits. As I told you in the beginning, so what I will tell you, I think I have to see once. I don't have a slide right now, but what happens normally earlier in all the sections of TDS, 194A, 194C, J, all the sections, there was a reference that if you're an individual and HUF, and if you have a turnover exceeding limits specified in subclause A and B of section 44AB,
yes,
there was a reference. Only if you exceed those limits, TDS is applicable. So now that wordings have changed. What they have mentioned is they have removed that A and B reference. They have mentioned there that if your turnover exceeds 1 crore and if your business profession exceeds 50 lakh rupees, in that case, TDS will be applicable. So, for example, if you say that this is the first year of business and my turnover is, let's say, 11 crores, okay, right? So, 11 crores turnover, in that case, I will start deducting TDS from the next year, not in the, because in the previous year there was no, it was not in existence. Okay. But suppose my turnover was, let's say, 7 crores and I'm not subject to tax audit because I don't have cash transactions. So in that particular year, I'm not subject to tax audit. But in spite of that, in the next year, I still have to comply with TDS provisions because my limit of 1 crore is exceeded in that year. So the thing is very clear that we have to see whether 1 crore limit and 50 lakh limit is there or not, irrespective of tax audit. Because last year, I think whenever I took session, there were a lot of chartered accountants have still a misconception that tax audit होता है तो ही TDS आता है. वो अभी लिमिट चला गया because of a limit अभी इन्होंने चेंज कर दिया. Yes, I think Ramesh ji, I will definitely share the PPT. There are a lot of things that I have covered in the PPT जो मैंने अभी आपको बताया, सब कुछ मैंने डिटेल में PPT में दिया हुआ ही है. Even the subclause are mentioned in the PPT that is already there. Any other question that you are having?
The TDS on director salary, is there any provision that as an employee we have to treat him and make TDS, or there is no such need?
No, normally see for the sitting fees we take it as a 194J, but the normal salary we treat as an employee only and we deduct it for 194J.
Okay, so on director salary, one needs to make TDS, right?
Yes. Director salary will be include the director as an employee, then 192 will be there, and if it's getting sitting fees, then it will be 194J.
Okay. And what about then partner salary, sir?
No, so partners remuneration there is no reason for TDS. No? Partners remuneration they have been exempt, so no TDS on that.
Okay. Got that, sir.
Any other query that I'm not seeing a chat box if there's any other.
Sir, there are certain payments on which, let's say, TDS is not deductible. Then for all that, let's say, reimbursement of expenditure, you said that TDS would be applicable. So like there are certain types of payment on which the TDS is not applicable, so that it would be like more of like income from other sources, kind of, where nothing is applicable, then 190 kind of, or
No. There is no section like that. There is no section where kind of a restitutory section के यहाँ पे TDS करना ऐसा नहीं है. So if for normally reimbursement में TDS नहीं आता है. For example, if a chartered accountant, what we do is we give a professional bill. We also give bill of let's say if you pay MCA charges on behalf of our client, we give a reimbursement wala bill. So if you give two separate bills, in that case TDS on the reimbursement will not come. It will come only on the professional charges. But I was talking about the 194R. Whether that benefit, for example, if I am traveling to, let's say, Bombay for a work, and I am supposed to bear the expenditure. It is my expenditure. But suppose client pays it on my behalf. It reimburses me the amount. The bill is everything is in my name, but the client is reimburses that amount. But the benefit of purposes which is arising from a business, and those kind of reimbursement will be covered under 194R. But in routine cases, the reimbursement will not be forming part of the section. One more thing is that if suppose I raise a joint bill, like my CA professional bill plus reimbursements, I raise only one bill. In that case, on the entire amount, TDS will have to be deducted under 194J. These are the provisions for the reimbursements. And especially for the 194Q, I think this year we have to be very careful that normally what happens that if we are not deducting TDS on purchase, we have to be careful that 30% will be disallowed. So if, for example, if you have, let's say, purchase of, let's say, 1 crore and on which TDS is not deducted, then 30 lakhs will be the disallowance amount. So that amount will have to be very carefully seen that whether each transaction TDS has been properly deducted or not.
So if I am traveling for the audit and client reimburse my expenditure, then 194 is applicable.
Sorry, I didn't get the question.
If I am traveling from here to X place to Y place, and client reimbursement for the audit purpose for the traveling expense, the 194R is applicable or not?
No. In that case, they have clarified in the guidelines when they issued that suppose the bill is in a company's name. कंपनी के नाम पे बिल है और आपने पे करके कंपनी रीइंबर्स किया है, इन दैट केस 194R will not be applicable.
नहीं, ट्रैवलिंग की टिकट तो मेरे नाम पे होगी ना?
नहीं, ट्रैवलिंग की टिकट नहीं है, ट्रैवलिंग का बिल किसके नाम पे होगा?
वो तो मेरे नाम पे आएगा.
हाँ, तो आपके नाम पे है तो उसको गाइडलाइन में बोला है कि उसके ऊपर TDS आएगा, बिकॉज नॉर्मली उन्होंने क्या बोला कि कंपनी के नाम पे अगर बिल है और कंपनी पेमेंट करता है तो वो रीइंबर्समेंट में TDS नहीं आएगा. बट इफ सपोज यू आर सपोज टू पे, आप ट्रैवल करो और आपको ही पे करना है और कंपनी आके बिहाफ पे पे कर रही है, तो इन दैट केस TDS आएगा.
यानी टिकट मैंने पेमेंट कर दिया है, वो मैं टिकट क्लाइंट को देता हूँ, वो मुझे रिइंबर्समेंट करते हैं, तो 194R आएगा.
वो एज पर गाइड, अगेन मैंने क्या बोला, गाइडलाइंस है. एज आई टोल्ड यू कि भाई ये गाइडलाइंस में भी अभी बहुत सारे इश्यूज है जो सॉल्व होने बाकी है. अब ये प्रैक्टिकल इशू में क्या होता है, क्लाइंट रीइंबर्स करता ही है. हाँ, इन केसेस में, बट उसमें क्या होता है, क्लाइंट विल देन इंसिस्ट कि वो बिल मेरे नाम पे होना चाहिए, फॉर एग्जांपल क्लाइंट के नाम पे होना चाहिए. तो जो गाइडलाइन में लिखा है कि अगर मिस्टर एक्स कंपनी के नाम पे बिल है और एक्स कंपनी पे कर रहा है तो फिर TDS की जरूरत नहीं है. तो उस
नहीं,
तरह
कंपनी के नाम पर तो बिल नहीं है कि मैं ट्रैवल टिकट करेंगे, फ्लाइट
हाँ।
टिकट का कुछ टिकट करेंगे, तो वो तो उनके हमारे नाम पे बिल तो टिकट आएंगे।
हाँ नहीं वो आप अगर आपको ट्रेवल एजेंट के नाम पे करते हो, ट्रेवल एजेंट को बोले कंपनी के नाम पे बिल ले सकते हो। अगर आप खुद ही पेमेंट कर रहे हो तो फिर आपके नाम पे ही होगा ऑब्वियसली।
ओके।
हाँ बट एज आई सेड कि भाई दिस इज दे शुड कम अप विद सम नेगेटिव लिस्ट जैसा कुछ होना चाहिए कि जहाँ पे
Yes,
ये
sir.
पर्टिकुलर पेमेंट्स में नहीं होना चाहिए।
Yes.
बिकॉज अभी इतना कंफ्यूजन है इस बार। ये चीज ऐसी है ना कि जो क्लाइंट को भी समझाना इज लिटिल डिफिकल्ट, यू हैव टू एक्सप्लेन देम कि ये सब चीजों पे टीडीएस एंड 194 आने वाले हैं।
सर क्लाइंट को ही बोल देना कि आप टिकट बुक करवा दो, कोई प्रॉब्लम ही ना हो 194 आवर का।
ये मैं तो भी हमने एक भी नोट बना के क्लाइंट को भेजा था, तो दे टोल्ड कि भी आप गवर्नमेंट को बोलो बिजनेस भी वही कर ले हमारे बिहाफ पे। बिकॉज़ इतने कंप्लायंसेस बढ़ा रहे हैं, मतलब यू ओनली डू बिजनेस ऑन आवर बिहाफ।
एक्चुअली बाकी अभी वही रह गया है।
सही है। एनी अदर क्वेश्चन?
No
आई
question.
थिंक वैसे मेरे आई विल गिव माय डिटेल्स आल्सो देयर इन द प्रेजेंटेशन, सो किसी को भी होगा वी कैन रीच टू मी
Okay.
लेटर ऑन आल्सो।
Okay. Sir. Thank you, sir. Now, on behalf of Gandhinagar Civil Sarkar, I thanks Sri Harit Dhariwal sir for the detailed such presentation on TDS regarding every close by close and a very updated knowledge sharing for us. And we will arrange in future also next program for TDS also.
Thank you. Thank you to all the participants for their active listening, and if you have any queries, you can anytime get back to me. Thank you so much.
Thank you, sir.
Thank you, Romil bhai. Thank you, Meet bhai.
Thank you.
Chintan bhai, thank you. Yeah.